Hi, ladies and gentlemen. Welcome to SA Accounting Academy. Here's a short clip on one of our previous webinars. I hope that you really do enjoy it.
I hope they are, that you can hear me wherever you may be. I hope that you're having a good week. I don't know how everybody else is feeling. You're supposed to be winding down to the end of the year, and it almost feels like we're ramping up. I was just saying to Jeremiah at IFRS that this is my 9th webinar this week. So I am, if I'm sounding a little bit husky, it is that my voice is deciding to hang on for as long as it can. And I have to say that I'm looking forward to us enjoying each other's company and then having a nice, tall, cool glass of something at 4 o'clock. This session is an interesting session because, and please forgive the date, I suddenly looked at this and was like, where's that date come from? It has just been a week, and I think a bit of self-review threat came through here. But welcome. I always love to scout in the attendance names to see who I know and who's familiar. And it always intrigues me when I see new people. So for those of you that haven't had a session with me before, I am so excited that you are here. This is a session I was invited to do, and I had to put my thinking cap on. And it actually really intrigued me, and it was a really interesting session to think about, okay? To think about and to work our way through it. With doing this, I've put it on one of my to-do list items is to ask to run a session on the conceptual framework for next year, even if it's just a quick 2-hour session, mainly because first off, it is our origin document. It is the document that guides all the principles and all the standards, and it has been updated. And I think the update kind of got lost in everything else. Plus, they were working on it. Next month, hang on a sec, when did that come out? And it was effective from the first for financial year ends beginning on or after the 1st of January 2020. So I've got a sense that we were otherwise distracted in the world and not really focusing too much on things like the change in the conceptual framework. Plus, when you read it, and I have to say that on the first reading of it myself, you are at the risk of going, well, this stuff hasn't really changed so much. It's all fine. Just carry on with life as usual. And a little bit of what I refer to as the ostrich syndrome. If I put my head under the if I put my head in the rocks and under the sand, and maybe I can pretend it hasn't happened and just carry on because there's too many other things going on. But in the last 2 weeks, actually, I was actually quite glad and excited that the session was coming up, because it's sort of really getting to be a point of note for us to deal with and for us to look at. So this is the inaugural session that I'm running, and it's really made me quite curious and want to dig in. It's like tickled my interest and tickled my curiosity. And that has always maybe possibly dangerous for you as the delegates when my curiosity gets tickled, because then I usually go finding problems. So what is, for those of you that are new, this is me. I didn't realize I was pretty in pink again. I seem to have a bit of a trend here. So what we are dealing with and what we're looking at is, this is who I am and what I'm about. For those of you who are new and you don't know me, I think this is fairly up to date. Life is busy, life is crazy, and I always say yes to certain things, and then I sort of work life out later. Sorry, ignore that. That was the request. I thought I deleted that out of the slides. Whoops. But it was the request and the curiosity that started all of this. So Rob, being the CEO of IFRS, sort of contacted me and said, hang on a sec, there is this intrigue and this interest, and could I please do something on it? And here we are. So I really looked at this and thought, well, you know what, there are a couple of issues to this. First off, the conceptual framework's amendment and changes created space. It created the ability for us to look at these right-of-use assets. So we need to go back and find out how, what, why, when. Where did we get the space to be able to do this? What's changed? What is new? Okay. And it's really, really important to take cognizance of the fact that the definition of asset changed. Okay, so the definition of asset has changed, and therefore we've brought in all these new assets that previously, possibly were just pie in the sky. Now, it's a slow burn situation. It's kind of like back in the late 90s. I don't know if how many of you were around practicing, studying, getting experience in the late 90s when fair value accounting was bubbling. Okay, out of curiosity and interest, the first time fair value accounting was put into a standard was in the agricultural standard in 1994. And in 1999, we started to get this, IAS 32 came out, and we were like, no, they'll never do fair value accounting. Never. How can we go to fair value accounting? Fair value accounting was like radical. It was absolutely radical for the time. And I remember lecturing and being involved and talking to my colleagues, and they were going like, no, they won't do this. There's no ways they'll do this. It'll always be cost accounting. It will always be cost accounting. Yeah, 20 something years later, and fair value, we are actually pushed more and more into the fair value space than ever before. And I've got a sense these right of use assets is another turning point in our accounting journey. It's another evolution where the accountants are catching up with and getting to the place of catching up with business. And I actually saved on my phone quite an interesting picture. I think we've all seen these sort of versions before, where it was sort of saying, it's amazing the world we live in, because not too long ago, we didn't have Uber, we didn't have Airbnb, we didn't have all of these strange and wonderful ideas of what we are dealing with now. So Alibaba has no inventory. So one of the largest warehouses and distributors of goods has no inventory. Airbnb doesn't own a single property, although it's the largest hospitality group in the world, or company in the world. Uber doesn't own a single vehicle. Facebook doesn't own a single printing press, even though it's the largest marketing company in the world, because Facebook is actually marketing. So we've got an evolution in business, we've got an evolution in the way people think, and the accounting has to get up to grips. I mean, have you ever thought about what these balance sheets and income statements look like? And I'm sure many of you have got clients or are in the space, possibly in your business, where I know that I was speaking to. I was involved in a potential idea not so long ago, and you speak to these IT developers and these app developers, and it's like we monetize this. And as a classic accountant, by the way, I'm starting to think that those of us, we're a bit retro. We are classic accountants. I'm going like, well, what asset is generating this income? Where's this income coming from? Because we are so used to and ingrained in our thinking about the fruit of the tree. The fact that the capital asset, the tree, produces the fruit. So on my balance sheet, I should have the asset being the tree to produce the income, which is sitting in my income statement. And now we're getting these transactions and these arrangements and these YouTube streams and these apps that people are developing, which are being monetized, that people are getting income from something that has no physical form. Okay, we're getting income from these things that are out there that have no physical form, but people have got the right to the income. They've got a right to the fruit. It's sort of like some magic fairy just arrives and drops a basket of fruit on your door and says, here, have this. And we as accountants are going, well, hang on a sec, but what did this benefit come from? Where did this benefit arrive from? And that's a classic accountant's thought process. It's a classic accountant's challenge to this. In this space, and as it's been creeping in, and while I've been doing lease accounting, IFRS 16 training and IFRS 16 implementation, and even, borderline in IFRS 15 with revenue recognition, because a lot of these transactions they've got these revenues that are coming through, and we're trying to sort of see, Are we entitled to this revenue stream? What makes this revenue stream mine as opposed to somebody else's? I always sort of nudge, wink, wink, and heckle my tax associate, my tax partner, because
I hope that you enjoyed that video. For more of our webinar videos, go to www.accountingacademy.co.za. Thank you and have a lovely day.